All right. Good afternoon, everyone. All right, let's get a few things sorted. We can get started. Okay. Today, we are going through the mastering divergence in trading. So as we look for a couple more people streaming in, and as we look towards a couple more people streaming in, we'll be going through together on Advantage Masterclass on mastering divergence in trading. So if you hear me okay, if you can see my screen, give me a quick thumbs up, let me know. That's all good. And we shall see. Give it a minute before we get started. And as usual, if you're joining me on this call, whether it's on YouTube, whether it's on Zoom, or whichever platform you're joining us from, put it into the chat. Let me know where you're joining us from. I'm always happy to see where my audience are coming from. So do let me know. Put it in the chat. Let me know where you're joining me from. A minute or two before we get going. Fantastic. Good stuff. Hey, Revio. How's things up there? How's things in Liverpool? If you have any experience in trading in using divergence in your trading as well, let me know if you've got any questions. If you need any particular clarifications, I'll be happy to guide you through that. And if you have any, pairs, what we'll do is we'll go through some setups, and then we'll go through the theory, the setups, and then we'll look into the actual charts as well to try and find some current setups. Wet but warm. It is a terrible weather nowadays. It is terrible. All right, so let's get started. So welcome again, everyone. Today we are going through mastering divergence in trading, basically how to use one of the strategies, combining price movements together with an indicator to show you a divergence, right? A difference in the movements, to get you a possible or high probability setup that you could deploy into your trading journey, all right? So my name is Jin Dao. Everyone calls me Jin. It is the 16th of August, and we shall get started. So with that, as usual, before any sessions, before any webinars, what we're going to do is we have a quick disclaimer that any information, context, opinions expressed in this presentation and in the following slides are solely those of the presenter, not necessarily those of Advantage, and are solely used for educational purposes, as they do not constitute investment advice and or consultation on how a client should trade. Advantage does not guarantee the accuracy or reliability of the information provided herein. So basically what that means is that you should do your due diligence before you enter any trades. I will be looking at going through the details about using divergence in your trading. I will be looking to some possible trades setups with the way the market is moving. I'll be looking at some charts towards the end of the session. If you do jump into any trades, make sure you do your due diligence, manage your risk, right? What I find is that most traders, they don't actually lose that badly or that much from a strategy. Most traders actually find a bigger or encounter bigger problems when they ignore leverage, right? They over leverage or they over trade, enter too many trades at one time, too big a trade at a time, or that those two are the bigger key problems that cause a trader to lose, to blow up their accounts, rather than a trading strategy, right? A bad trading strategy could cause you to lose trades, but you need a lot of bad trades before you lose the whole account, compared to if you over traded one bad trade, or if you over leveraged one bad trade, could blow up the whole account. So just remember, do your due diligence, manage your risk, check your leverage, check your margin before you jump into any trades. Again, a quick introduction of the team here. We have a whole team of analysts here to provide you the help, the guidance through your trading journey. As you can see, I'm Jin, one of the prop traders here, to guide you through the way I look at using divergence with my trades, and the way you could start learning about divergence and possibly look to adopt divergence as one of your trading strategies when you approach the markets. All right. So if you don't know what divergence means with regards to trading, that's what we're going to go through now. Basically, that's my first slide there. What is divergence in trading, right? Divergence in trading is basically, let me find my mouse. Okay, there it is. So basically, divergence in trading is when you see a, why doesn't that load up? Okay, so I can't seem to do a draw. Let me bring that up. Okay. Odd. Okay, so divergence in trading is basically when you see this happen, right? Price, in this case, moving towards the upside. Let's try that again. Okay, price moving towards the upside. The blue would be price. See price forming a higher high, moving towards the upside. And an indicator, for example, an RSI or an MACD pushing towards the downside. When you see that happen, that's what we call a divergence, right? A regular divergence is when price pushes upwards, or price, and then the indicator pushing towards the downside. Divergence, the split, something going up and something price going up, and the MACD or the RSI pushing lower. You can see that, and that's giving us the idea that it might be a bearish, or if price going down, forming a lower low, but the indicator forming a higher high, then that gives us a bullish divergence. All right. So again, a couple of things to get through today. Oops, get back to that. A couple of things to get through today. What is divergence? It's when we identify the scenario with price and an indicator moving in a different direction. Next, I'll show you as well what indicators you can use with divergence. Quite simply, you could be looking at the stochastics, you could be looking at a RSI, you could be looking at the MACD to use it for divergence. So stochastics, RSI, relative strength index, and the MACD, the MACD convergence and divergence indicators. What you notice is these are mostly some oscillating momentum indicators, just to give you that view of how the indicator is moving differently from price. There are many different types of divergences or divergence, right? There is the normal, the hidden, and the exaggerated, right? So as I showed you on the slide before, on the coming slide as well, 3 different types of divergence: the normal, the hidden, and the exaggerated. I'll go through that first before I look into some examples, and then we'll combine them together for some high probability setups. I'll show you some examples, and then we can go through some live charts let's look for it together. Get you through the thought process to look for some possible divergence on the live charts. So great, fantastic. If you have any other questions, please feel free to put it into the chat wherever you're joining me from. Let me know, and I'll be happy to elaborate, repeat a point, to go through different things. If you have any charts you want me to look at to check with, if you found a divergence, I'll be happy to double check your divergence ideas there as well. So I was sharing with you, there's a regular divergence, right? A regular divergence. What that means is you actually see price moving towards upside or price moving towards the downside. Regular divergence is when price actually moves against the bearish, well, against the intended direction, right? So price moving higher, but you see this is a bearish setup, right? A price moving higher to lead to a bearish setup, or price moving lower to lead to a bullish setup for that big bounce towards the upside. In this case, it's the MACD or the RSI, the indicators moving towards that expectation, that bearish expectation. You can see the indicator forming a lower high or forming a higher high to push price towards the upside. So regular divergence is when you see the result actually following with the indicator. Hidden divergence is a flip, right? Is an inverse of that. Hidden divergence is when price or eventual results follows the actual direction of price. So that's when price is actually hitting the top, coming back down, hitting the top again. We expect that bearish potential because we see the indicators here looking at an upward move, price pointing towards the downside or moving lower. We're going to see that hidden divergence or a bearish move, or setting up for that bearish move towards the downside. Again, bullish would mean a flip of that, where we see price bouncing off higher, and then the indicators closing lower. All right. I like the next one. This is the best one that we can see, is the exaggerated divergence. Is when you actually see price not doing too much, right? It's gone up, hit the top, turn back down, gone up, hit the top, and turn back down. I'll put that question out there. What does this look like as well? Right, it's gone up, hit a horizontal level, turn down, gone up, hit a horizontal level, and turn down. What does that look like? Can you let me know? Put it into the chat. Right, I think I found my pen. When it bounces there and bounces there, and then it turns down. That's a chart pattern that looks like that as well. What would be a chart pattern that looks like that? Or when it finds that bottom once and bottom twice before it bounces towards the upside. All right, I see a couple of people typing it in. I would say, yeah, M shape or double top. Fantastic. Yes, it is the double top and the double bottom. But, sometimes when you're using just one chart pattern alone, you might not be confident. You might not be so happy to see, or you might not want to jump into a trade just because of chart pattern. Now, put it together is when you see that hit, turn down, hit and turn down. And also you see the indicator with a downward move, right? Forming a lower low there, or in this case, forming a higher low that shows us an exaggerated divergence, because price is not moving. Price has moved right across, but the indicators have showed us that downward move or that upward move. Usually what we see is that, as the name says, the exaggerated divergence tends to have a more significant, or results in a more significant move compared to the other divergence. All right. But that doesn't mean that the hidden or the regular is going to have a smaller move, right? It all depends on a few things as well, right? So when you're looking at trading on a divergence or trading using divergence, what are the few things to look out for? Or what are a few things to pay attention to? If you have any experience, if you traded with divergence before, share with me. What do you think are the few things to pay attention to? All right. Okay. So a few things I would say is that, okay, One is I'll look at what the trend was. I'm writing with my mouse, so it looks a bit terrible. All right, so pay attention to what the trend was. Divergence, because we're looking at either bearish or bullish, it gives us a bit of a possible reversal indication there. So pay attention to what trend was. I tend to think that divergence works a lot better when we see it at or near a support or resistance level, right? A support or resistance level, because if it happens right in the middle, let's say we have a resistance level there, support level there, and you see price going like that, right? And then the indicator, in this case, moving lower with that divergence forming, is not going to be as strong as if we actually saw it happening right at that resistance level. You can show that it's could lead to a strong rejection of that resistance towards the downside. Okay, so I like to see it happen see the trend, look at the support resistance. And what I always suggest is when you look at trading with a divergence, try not to do anything less than a H1 time frame, right? Nothing less than H1 time frame. I would even suggest H1 or H4 would be the best time frames to look or to try and deploy this divergence. Why so? Is because if you look at it on anything less than the H1, if you look at anything less than the H1, M15, M5, it becomes very noisy, right? It becomes very noisy. You're going to see price changing directions very quickly. You're going to see indicators shoot up and shoot down very quickly. So it becomes noisy, right? And then if you look at anything more than H4, it could actually take a long time to set up. If you're looking at this on a daily time frame, just to wait for price to come down, hit, bounce, hit, and bounce, or bounce towards that point, and for the indicators to follow suit, it's going to take a long time to set up. So most retail traders, I find, don't have that patience to sit there and to wait for that to develop. So what I find the sweet spot is between those two time frames on the H1 and H4. Fits nicely within your support and resistance levels. Relatively quick to set up in terms of the patterns or the divergence, and then also relatively quick to possibly reach your take profit levels or to get into profit so that you can close out the trade. All right, so this is what I would suggest. Look at the trend. You want to identify the trend, because you don't want to be looking for or rather it's going to be a bit less likely if you see a big downward move and then you see a bit of a bearish divergence forming that way. All right, that's the price movement. And then if you see indicators moving like that, right, that bearish divergence, it could happen, but I think we possibly will see a better result if we look at it as more of a reversal than if it follows that trend, right? Still can work, but you see better results when you identify the trend, support, resistance. Like to look at it happening at a support or resistance levels, and then to pay attention to it between the H1 and H4 time frame. All right, so far so good. All right, so with that, the next one, next slide. Some examples, right? Some examples here, you can see that firstly, price is testing a key horizontal resistance level. See, so this is the one thing I want to pay attention to. Second thing that I pay attention to is a support or resistance levels. You can see that price is testing or forming at a horizontal resistance levels, with price making a small high resulting in a bearish divergence. You can see that price was there and it broke a little bit higher. a small bearish divergence, and then descending resistance on RSI, called the past two reversals. You can see a small divergence towards the downside there. It's a bearish divergence. So given that, you can see, and I hope you can, if you cannot see this, please let me know. Where is it? All right, given that you can see that bearish divergence, just to highlight it again, you can see that move there, slightly towards the upside. This one down, it even draws from that next point down. So it's almost like a 3-point towards the upside. You don't have to always have a 3 points. You can even look at it as 2 points. 3 points makes it even a little bit easier to spot that diagonal move that gives us that bearish divergence. So what do you think is going to happen here? You know, nice horizontal resistance or nice bearish divergence forming at a horizontal resistance. In this case, we're using the RSI as a indicator there. What do you think is going to happen? We should be looking for price to break towards the downside. Because of that, we saw that with that bearish divergence, right, on 1 point, on 2 points, or 3 points, you can see that it rejected that resistance level and pushed towards the downside, right? So price reversed strongly from, so many factors causing price to turn down, rejecting the horizontal resistance and also the bearish divergence with the RSI, and price forming that move to push it down towards the next, almost towards the next support level. Okay, you can also see the RSI has reversed strongly from that overbought region all the way down before a big bounce back up. You can see that RSI, as it pushes towards the upside, you can see price also pushing a bit higher there, right? We could actually possibly even be looking at some potential. If that pushes, no, that wouldn't work. So that's moving, oops, that's moving in the same direction, so that wouldn't work. Okay, so this is not a divergence because they're both pushing towards the downside. I was looking for that to push down and possibly something to push up, then we could see another divergence there again. So that was one example of how a divergence works. So I'll just do a little bit of a recap. I see a question there asking for a bit of a recap. Okay, so that bearish divergence pushing up. Okay, price at this point pushing a little bit higher. You can see a slight gradual push, and then also with the horizontal resistance, and then the RSI pushing slight diagonal move towards the downside. With that rejection of that resistance level, we can expecting it to push towards the downside. So that's what happened as we saw it push lower. So what you could also be looking towards, I'll scroll back to the example here, is when you have that's a normal, there's a normal, regular, a hidden, and an exaggerated divergence. Okay, so this is just a normal divergence showing you the example there. The next one, this is actually quite interesting, is when you actually see a repeated divergence. What does it mean by repeated divergence? Okay, wait, I got a question there. Thanks for it. I have a question. I'm a newbie, so I don't understand what's support or resistance. All right. I'm sure I'll go because today is a bit on the divergence, Helen there. So support SNR is support and resistance levels. So support and resistance levels is when we see let me find a better example there. Right, when price has hit a horizontal level, it's hit and turned back down, hit and turn back down, hit and turn back down. That's what we call a resistance level. A support level would be, in this case, just as example, the bottom level where price has hit and bounced back up. hit and bounced, hit and bounced. That's what we call a support level. Okay, so that was that support, and that's resistance. That's what we call SNR, SOR. H1 or H4 is on the hourly or the 4-hourly time frame. That means every candle forms is formed either on a 1 hour time frame, or if you choose the H4, then every candle takes 4 hours to form. Check out the Vantage YouTube channel. I'm sure there's a whole series of educational videos to guide you through, more specifically in more detail, the support, resistance, and the time frames as well. All right, but I just wanted to do this just so that as you go through this session, it will make a bit more sense, so you won't be totally lost with what we're going through. Good question. So someone else might be thinking that. Thanks for asking the question. So repeated divergences is when you actually see a divergence happening on a multiple divergence happening on that same chart. Okay, in this case, we can see that price actually has a bit of a divergence. This is possibly on the H4 time frame, small divergence pushing towards upside. You can see price pushing higher. And in this case, the stochastic, so we're using a different indicator here, pushing towards the downside. That bearish divergence, what did it lead to? It led to price dropping. Okay. Then one other thing to pay attention to is when you see that being formed, you see that turning over again. Right? You see that turning over. Okay, and then we end up having another bearish divergence. With price again forming another push towards upside, but the stochastics again forming another downward move. Okay, it looks exactly almost the same as what happened here. Is forming up again. So that move towards the downside happened as the stochastic pushed back up. We saw price continue climbing. And then the bearish divergence occurred again where we saw price pushing up, but the stochastic pushing towards the downside. What do you think is going to happen here? Right, naturally, the same thing, because it's almost the same setup, right? Almost this setup here is happening again. So we expect price to turn towards the downside. I'm sorry about all the scribbles. I hope it's making sense to you. I find that it helps to draw in a bit more just to pinpoint on what we're talking about. All right, so what we saw is that price pushed towards the downside. Let me just clear that out. Okay, so you can see it's a repeated pattern leading to a repeated result as well, right? As we see price on the bearish divergence here pushing lower, again a bearish divergence pushing lower, and in this case you can see it was a bit of a resistance level there where stochastics hit and turned towards the downside, hit and started turning towards the downside. So sometimes, it's not just about drawing your support and resistance levels just on the candles. Right? You can actually start identifying, or it might help to start identifying some resistance or support levels on your stochastics or RSI or MACD to help you. Right? It provides a little bit of a visual guidance to help you on identifying that potential divergence. Right? As price goes up, hits that level, turns down, you would anticipate that price is possibly going to struggle to break above that resistance. So you could actually give you a bit of a heads up, give you a bit of a hint onto, hey, we might see a divergence forming. Oops, sorry about that. Okay, so one common feedback I get when I teach others about how to trade a divergence is that they only spot a divergence after it has happened, right? So this is why having a resistance level or a support level to identify a potential reversal could be very helpful towards identifying your divergence setups. Okay. Any questions so far? All good? All right, fantastic. So the next one is the divergence potential, right? You always want to know, hey, if I spot a divergence, where should I look for it to go towards? Where could it hit and bounce, or where could it hit? Where's my take profit level going to be? In this case, right, first things, as the notes here say, take note of where the bearish divergence started, right? Look for where it started, as this could be where it was tend to reverse, right? So we're looking for this as a starting point with that push towards the upside. That's where we have a bearish divergence on price. And then that's where you can see that forming on the RSI towards the downside. So in this case, you see bearish divergence where price is making a higher high and RSI is making a lower high. So what you could be looking for here, or what you should be looking for here, is for price to trade down towards that. Try and draw a straight line if I can. That support level, right? That support level, because you can see that it got resisted a couple of times. It got resisted twice. That resistance level became a support level. So we don't expect price, we don't anticipate price to break support levels. We always want to see price trade towards the support level and then decide from that point what happens. If it breaks lower, hey, we could look for selling opportunities towards the downside. Or if it bounces back up, then we could look to see whether we can buy it towards the upside. But the main thing is that when you spot in this case, a bearish divergence with price moving on a higher high, making a higher high, and RSI making a lower high, then we're going to expect price to come down towards that support level. Okay, so how it would look like is when it does that, right? So price forms that bearish divergence, RSI forms that bearish divergence. You see price coming down towards that support level, towards where it started, and then it fails to break and pushes back up again. Okay, so as much as we anticipate or we hope that, you know, divergence is going to have that big counter trend move, I know that I've seen people, you know, identify a divergence at that point, right? A divergence like that, and then they think that, hey, price could or should go all the way down, breaking past that support level, you know, approach that next level, or even, hey, possibly come down to that next big level. Is not always the case, right? You always want to see, let it come towards a support level first, see what happens, whether it's going to break or not. If it doesn't, it's going to go up. If it breaks, then you look for that next move towards the downside. Thank you, Raviel. Super happy you said that. I really appreciate that. Okay. So the next one is forecasting breakouts. What do you mean forecasting breakouts? Right. So when we identify potential moves, right? You see a big trend line towards the upside. You see a bit of a bearish divergence forming, high and then a higher high. And you see that trend line. And as the RSI breaks below the ascending trend line before price did, this forecast that price might break it. Okay, so if I drew a line just to make it a little bit easier to see, is that you can see as RSI broke below that level, price still stays above that trend line. This gives you a bit of a heads up, right? It gives you a bit of a heads up that say, hey, we might be looking that this upward move is slowing down because there's also a bearish divergence forming, and we're anticipating for price to break towards the downside. So an RSI breakout with a bearish divergence with price breaking lower, it's a higher probability move that we can see price break towards the downside. Okay, so in this case, again, remember the first target was where it started. In this case, we've already broken. Then you start looking at the next support or resistance levels, right? So the next key support level here would be at about that point. I'll try and draw a straight line right across, right? You got another few points at about that level there as well. Okay, so few things to pay attention to here. This is quite a heavy slide, so just bear with me there. First things is how to forecast a potential breakout is when you see on the RSI, in this case, breaking below that trend line, right? Breaking below that trend line, giving you heads up that price could also break below the trend line, or a bit of a early heads up that price could break below that trend line, together with a bearish divergence forming, right? So all that put together, if we see price break lower, we're going to expect it to come down towards that first support level. If it breaks that point, then we could see it go down towards the next support level. All right. So what it actually looks like, you can see that it's gone up, break below that trend line together with the bearish divergence, broke towards, I'll clear that out so I can see. I can draw it again, right? So we've seen that break towards the next level, all the way towards that next key support level there. I think we have one more line at about that point there. Okay, so many things to pay attention to. Again, just a quick recap. As the RSI breaks below the trend line with price still holding above, you're going to expect, or you're going to look for price to break below that trend line moving forward, together with that bearish divergence as we see price forming a higher high and RSI forming a lower high, right? So we wait for that to form, and then we look for that breakout towards the downside, first support level, and then the next support level towards the downside. I tend to try and break my trades up. I wouldn't hold on to a trade expecting it to break that. If price came towards this point, I would close out my trade. I would look for it to break below that support before I enter another one. I wouldn't hold on to that trade all the way down, just because you never know, it might hit and bounce back up again. So I tend to want to secure my profits at a support level. If it breaks, then look to sell it down again. All right, so this is actually a very powerful way, or another very powerful way to look at it, especially giving you a bit of a heads up, right? I like this as a bit of a warning bell, just to tell you something could happen. We could see a big move towards the downside. Any questions so far? Any questions from anyone so far? All good. Fantastic. So the next thing we're going to look at as well, oops, I'll clear that out, is when you see the RSI breaking out of the descending resistance, right? Same thing. This is just a flip of what we spoke about just then. That was a upward trend line. This is a downward trend line. You can see RSI breaking out of the descending trend line. So what do you think is going to happen here? Right? What do you think is going to happen here when we see that RSI has broken that downward trend line? Right? We see a bit of a upward move there on the RSI. We see a bit of a downward move there on the price. Right? Do we see a divergence, or do you guys see a divergence there? Okay. Okay, I got a question there. Can you explain a breakout? Okay, breakout is when price, or in this case, the RSI or the price, breaking above or below a level. Okay, so breakouts can happen in several different scenarios. I'll just do bit of an extra bit here. When price, let's say this is a horizontal resistance level. Okay, let me just clear that out and do it again. Okay, you can see that price, there's a horizontal level. If the candle goes towards upside, then we would say, and that's going up, we would say that's a breakout towards the upside. Does it mean when the candle breaks and closes below or above the level, does the candle have to fully form above or below the level? Okay, it's simply cut through. Okay, I would technically a breakout can be just a cut through, but I would prefer or would suggest to have it as a form above that level, right? Why a form above that level is because if I had a diagonal trend line and then price just pushed up, what could happen is a lot of traders, if you're watching the market, you'd be, oh, great, I'm going to buy there. Yeah, you buy straight away, right at a point. And if price hasn't closed, then what could happen is that it comes back down, forms a bit of a pin bar, and then you got a bit of a reversal pattern happening already. So what I always prefer is to see, let me just do that. All right, what I would prefer to see or suggest for everyone is to look for a move up, a candle close. At least that shows you the intention of the market, right? Pushing above that diagonal trend line. Then we can say, okay, it's broken at that level. Now at that point, can we buy? Possible stop loss below that level, below the trend line or below the candle there. So it gives you, my view is that it gives you a bit more of a, lack of a better word, confident entry, because you've already seen price clearly breaking above. All right, good stuff, fantastic. Also in H1 or H4, okay, so I think if you're asking in terms of the breakout, so if you're looking at a breakout, I would say that if you drew that trend line on the H4, then look at it for look for a breakout on the H4 time frame. If you drew that trend line on the H1, then look for that breakout on the H1 time frame. I always believe that you stick to pardon me, you stick to the time frame that you are doing your analysis on. So you don't want to be looking at a H4 trend line and then you see price break above it on the H1, but then what actually happens on the next 3 hours is that it actually comes back down again, right? And then in that case, what would actually form on the H4 time frame would be pretty much a bit of a candle like that. Sorry, terrible drawing, but I hope you get what I mean. If you look at the H4 trend line, H1 candles, you could end up with a bit of a mixed message. So try and stay H4 trend line, H4 candle, H1 trend line, H1 candle. All right, fantastic. I'm loving the questions. Again, just a quick, let's get through this. As we see price breaking out of that trend line, gives us an indication that we should be seeing, or we could be seeing price break out of that trend line. We have a bit of a bullish divergence there. Oops. So what we actually saw was price turning up, right? Pushing towards that trend line. In this case, you can see a confirmation as RSI broke out strongly out of that trend line. And then a bullish divergence again, showing you a potential strong reversal. And what we actually saw was price successfully breaking above that trend line towards the upside. Okay. Makes sense so far? Fantastic. Okay, so what I've got so far, those are all the examples we've done. What I want to do as well now is to look into some possible examples that we might have, right? So I've got, let's go through some of the majors, right? So we're going to keep it a bit simple. We're going to just use the RSI there. We're going to have the do it on an H4 time frame. This is the Aussie dollar. We might or might not find some examples. So just let's have a look. In this case, it's already formed. Let me just try and do this. Okay, so you can see that price has a bit of a horizontal move there. And then you can see a bit of a downward move on the Aussie dollar. So that's actually one. Okay, do you guys remember what is this called? When we have a horizontal move on price and a diagonal downward move on the RSI. What is this called? Anyone with an answer? Let me see if you were paying attention. Okay, let me just show you here. So that's possibly an exaggerated divergence. All right, exaggerated divergence. Yeah, you almost got it there, Reville. Right? So as price moved across, RSI on the indicator pointing towards the downside, what we actually saw was that similar move moving across and that pushing lower. That's why we saw the Aussie dollar pushing towards the downside, In this case, right, what I would be looking for is, could my support level be about 6893? Could price get there before this level? I might even have another support level quite close to this point right now at about this 6990 level. So it's approaching that point. This was actually a trade I got into. I closed out before this session. If it breaks below this point, then I could be looking at another move lower towards that 6890 support level, the next support level of 6890. All right. So that was one example of a exaggerated divergence. Let's look at the euro dollar. Clear it out a little bit. Not a great one, but if I had to just find an example, you can see that it's pushed up, and in this case, slightly towards the downside there. Just checking the lines. Yep. Right, you can see that pushing up and that pushing down. That's why we see price trading lower. So you can see that, on the H4 time frame, divergences not hard to find, not particularly hard to find. Hope it makes sense to you. Okay, what I want to show you as well now, as we have spotted quite quickly, two examples, one on the Aussie dollar, one on the euro dollar. Another one to show you is if you looked at it on the M15, right? If you looked at it on M15 time frame, then it becomes really messy, right? I'll zoom it in a little bit. It becomes really messy because you could be telling me that, hey, price is going lower here, but no, we don't have it there forming. Let me find an example. Nope. Price going higher. No, nothing there. Oh, okay. That might work. So you could have price moving slightly lower there. Nope, that doesn't work as well. Okay, so see, could be an example as well that it's harder to find because there's so much movements, there's so much noise in the smaller time frames that it becomes harder to find compared to when we're looking at the Aussie dollar H4, spotted one almost straight away. When we looked at the euro dollar on the H4, spotted one almost straight away. Different kinds of divergence as well. Let's look at a Kiwi dollar. Well, we can see here as well, price pushing up, this RSI pushing towards the downside, again leading to that move. Expected that also because of the correlation between the Kiwi dollar and the Aussie dollar. So that's a similar move. The US CAD, nothing very clear. Nope. Nothing really clear. So what we're looking for here, right, paying attention to, in particular, like the Kiwi dollar, that trend. It was moving up, it hit that resistance level, a key resistance level of about 6457 or 6460, a rejection of that level. Right? So remember, I was telling you, trend was uptrend. We were looking for reversal, a rejection of a support or resistance level, and then on a time frame, this on H4 time frame, and then we spotted that divergence as price climbed with a higher high, but RSI had a lower high. That's why we saw that big, that supported one of our reasons towards that big reversal towards the downside. All right, makes sense so far? Let me know if it makes sense to you, or if anyone's even a bit lost, please let me know. Pound dollar. Pound dollar would be, nope. No, nothing yet, nothing at this point. Looking at it on H1 time frame, nothing as well. All right, so you don't always have to have a divergence for price to reverse, right? It could reverse without a divergence. How to tell if it's on up or down trend? Okay, good question there. How do you tell if it's an up or down trend? What I like to do is to just get an overall view, right? So up until that one, we can say, right? Let me just highlight a point. You can use several different tools. You can, where's my lines? Just a downward channel there, right? Okay, let me find my channel. Where's my channel? I don't see it out there. Right, so you could just do a rough channel, and that could actually show you a bit of a downtrend. If you just identify points, in this case, again, bit of a downtrend, or if most previously on, this is on the pound dollar H4 time frame, you could even be looking at these points to tell you it's a bit of an uptrend. So I would go on a bit of a broad-based view, right? Rather than try and focus too much, I would go look at the overall view just to tell you whether it's an uptrend or downtrend. Use the channels. It helps you if you highlight a few points and then covers up the area. It helps you tell, or helps tell you whether it's an up or downtrend. And if I continue to do that, right? If I just continue to do that, oops. It actually makes it a lot easier to tell, right? So this was a bit of an indecision there. There was a bit of a news there, but you can see there was a down. That's a bit of a push up, a short-term down, short-term up, and then now towards the downside. So I hope I answered your question there on how to tell a trend, right? What would be interesting on the pound dollar H4 time frame here is what happens at this support level now. At about this level here, 1.2. If price breaks below 1.2, we could see further downside. What I would also be looking for is if we can see any possible divergence, right? Any possible divergence to push price lower. To push price lower in this case, maybe a bit of a down there. All right, let me think. This could actually work. Nope. No, that doesn't work because that's also coming down. If price came down here, nope, Okay, so I don't think we'll form a don't think it'll be likely to form a divergence here, but we could be following that trend, and if it breaks that support level, we could see further downside. So watch on the pound dollar, watch what happens at that 1.20 support level. All right. Any other questions? Let me just scroll through and see if we spot any other divergence. Bit of a horizontal there, but that's not really forming much. A very slight one. But I wouldn't, I'll try not to pick too much. I would like to see, if I were to suggest to most traders, is I would like to see that move towards the downside on the divergence a little bit more obvious rather than something too gradual. What's the name of that tool of trading to draw that shaded trend line? That is the parallel channel. That's the parallel channel where you can draw the shaded trend line. Okay. Good stuff. All right. So let me see. I want to try and find one more. Let's see if we can find one more. Nope, nothing yet. US yen might have something actually. So I would think we would like to see what happens as it climbs up. All right, you can see that push higher, that price forming a higher high, but no, nothing yet at that point. There could be a bit of a move there, but it doesn't really align, so it doesn't happen at about the same time, so I'll be a bit more careful on that. But given that it's some form, slight, not a perfect example of a divergence, but with that forming, that's possibly why we see yen climbing towards the upside. Next key resistance level is at about 1.135.50 there. I want to see what happens to the US yen as it climbs towards that resistance level. If it breaks above, we could see significant upside, but it'd be quite interesting to see what happens at that point. Alrighty. So thank you all for attending. I hope, please let me know, actually put in the chat, do you think you'll start deploying or start looking out for divergence and possibly deploying it in as part of your trading strategy? And I hope you learned something good about using a divergence strategy. Fantastic. Thanks for that. Thank you, Helen. Thank you, Chan. Alrighty. So until then, remember there's a lot of news coming out, possibly some high volatility scenarios setting up. So make sure you trade well, trade safe, and I'll see you again. Take care now. Bye-bye.